This week on the Retirement Quick Tips podcast, I'm talking about navigating the storm, strategies for weathering a stock market downturn. Today, I'm talking about finding opportunities in down markets. And the tempting thing to do, I talked about this yesterday, is to just panic. Or, if you are emotionally centered enough to not sell, and especially after your portfolio takes a 10, 20% or more downturn, that's a great start. But moving a step further, we want to look for opportunities because some of the best opportunities that come with investing happen during these trying times. And we're not in them right now, thankfully, but we want to be prepared because, as I've been saying all this week, the next recession is coming. I don't know when. It could be right around the corner. It could be next year, a couple of years down the road, 5 years from now. I don't know. But we are going to have another recession. And when the time comes, there's always blood in the streets. So we want to be there and not be panicking ourselves, but we want to be prepared to take advantages of the opportunities that are rare because they only come along when there's a major crisis. Okay, so one of the opportunities that exists are in Roth conversions. The reason why the math works on this is because when the stock market falls, your portfolio is going to be lower as a result, unless you're not in stocks at all. But let's just assume you have an IRA, 401k, and you have a lot of money in there and you want to convert some of that to Roth. Well, if you wait for a market downturn, the value of that account is going to be lower. So the taxes on whatever you convert is also going to be lower too. So let's say you have $50,000 that you would like to convert to a Roth. You have to pay taxes on that. But if the market drops and now that $50,000 is worth $45,000 or $40,000, that would be a much cheaper time to convert to a Roth, and you're going to pay less taxes as a result. Now, there are some things to keep in mind here. Obviously, if the conversion is going to bump you into a higher tax bracket, that's something to look out for. But in general, when the market is down, it is a good time to look seriously at converting to a Roth because the taxes are going to be less. Because that money can stay invested, it's not like you pulled it out of your portfolio. When things start to turn around and grow again, it's going to grow just like it would have in the IRA, but now you have it in the Roth where it can grow tax-free. The second strategy is investing and deploying cash. A lot of people are holding too much cash right now. You might have a lot of money in the money market. Guess what? That's going to go down. That rate's going to go down pretty soon as the Fed starts lowering rates. Now, a lot of people out there have very little or anything meaningful to invest. They're just not holding enough cash. But I do know quite a few people who are holding a lot of money in cash right now. And a lot of that cash is earning, despite higher interest rates, is not earning that much. And so if you have a sustained drop in the markets, or even just a major downturn, even if it doesn't last very long, that presents an excellent entry point in many cases. And then if you are not just investing broadly in the stock market, but you're investing in certain areas or certain companies, sometimes there can be excellent entry points where an individual stock that you're looking to buy could drop, 20, 30% or more. And that presents an excellent entry point as well. I did this with a stock at the end of 2022 when the markets were bad and the stock had dropped even more. But that's my preference. I enjoy investing in individual stocks in my own portfolio. So I bought some and I'm very glad that I did because it's had a nice healthy gain since then. Okay, another one is tax loss harvesting. So this is where you sell positions in taxable accounts. It could be mutual funds, it could be ETFs, any investment in a taxable account that has a loss. Now, you can use it in the current year if you don't have any offsetting gains, and depending on how big the loss is, you can carry that forward to future years. So there's a lot of tax benefits, and it's a good incentive. A lot of people are reluctant to let go of their dogs. So if you have a stock that's down, not just because the broader market is down, but this thing, it's not going anywhere. A lot of people are reluctant to sell that because they don't want to sell it at a loss. But look at the tax side of it. If you have a big loss in a certain position and it doesn't have good future growth prospects, then the downturn is a great time to be selling that and cutting your losses. And at least you'll have a nice tax benefit if you own that in a taxable account. And then the last one is that you want to have your eyes open to be looking for pockets of opportunity. And one of my favorite examples that I think about quite often is what Warren Buffett did in 2008. He injected billions of dollars into troubled companies, GE, Goldman Sachs, several others. And you see this today too with certain parts of the economy. So like in real estate right now, there's a lot of problems in real estate. And actually in Portland, where I live, one of the largest and well-known office buildings in the city is called Montgomery Park. It's really old. I had a client I have a client who used to work in there. So I would go in there at least once a year to visit them. I actually had my senior prom in this building. It's a beautiful, iconic building in Portland. And earlier this month, the building sold for $33 million, which was an 87% decline in value from what it sold for just a few years ago in 2019. So in 2019, somebody bought Montgomery Park for $255 million. Earlier this month, that same building, it's not like it burned to the ground and it's just ashes. No, same building sold for 87% less than what it sold for just 5 years ago for $33 million. Absolutely insane and an incredible investment for the people who came in and bought that. Now, you may not have $33 million to invest in office buildings, or you may not be able to invest billions and do what Warren Buffett did. He had a lot of courage and a lot of cash. But if you keep your eyes open, the biggest and best opportunities present themselves during times of crisis. So if you can avoid the emotional roller coaster of being tempted to sell, but instead, always hanging on to enough cash so that you can do something and buy something, or be in a position where you could sell certain assets to buy something else, that's where you find the best opportunities, is in times of crisis. All right, that's it for today. Thank you so much for listening. My name is Ashley Michike, and this is the Retirement Quick Tips Podcast.